Good evening. This is the Elliott wave update for the S&P 500 for Thursday, May 12th, 2022. The downside to continue, the worry wall continues to be built, and it's actually being built to the downside versus the upside, but it is a wall of worry. And there was plenty of opportunity all the way around in the S&P, in the NASDAQ, in the Dow, in the Russell. Your equity or your equity or index of choice or your ETF, they all were trading heavily. Individual stocks trading very heavily today. Apple contributing buckets to the volatility in both the S&P and in the NASDAQ. And just a lot of opportunity, a lot of opportunity. That's what I'm going to leave it with. Now, as far as our count, it is continuing to the downside. We continue to work through what I am counting as a minute fifth wave to complete minor wave 3 of the intermediate wave 3. So here's the start of the intermediate wave 3, and here's the start of the minor wave 3. So very well developed, finally coming into an area that should complete it, at least the minute and then the minor third. And we did get sub 3,900 again. In fact, we broke solidly and got down to a low of 38.55 before having to rally all the way back and get ourselves back above 39. And it just always is surprising of how traders have to have it within their comfort zone. And their comfort zone is that round number. Maybe it's because they're that much closer to 4,000, but you understand it's like when they drop out of a larger round number like 4, like we've now gone from 4,800 to 4,000 and below. So it's a lot of S&P territory. It's not over. It's following through, but it's still got way more to go. Way more to go. Now, I'm going to drop down to, before I get off of this chart, here it continues to be pretty clean to get down to that zone that I've been speaking about at 37.51 down to 37.28 in there. Our first zone, we're almost right down to it. We have 37.26, 38.02, and then right below at, I think 37.90. So we're there. We're into that zone. Another solid down day. With the volatility to the upside makes no difference as when I can see it get down there and I can finish my count, this internal count, then it's like all lights will turn green to put in a minor fourth wave rally. That rally should be, well, substantial in terms of trading, because we have a stronger probability of getting up above 4,200 and possibly as high as the 4,300, but I'm not looking for a whole lot beyond that. We've got some major, at least on our daily chart, the daily 50 moving average is at 42.82. That should provide some stiff resistance. The 20 at 41.45 should give us resistance for any rally. So as we run back, they may go lickety-split to get there because that's their comfort zone. That's their value zone. Buyers are willing to run it back up there because that's where they will buy. It's like, well, that's silly. Buy it here. But in any case, it'll fly. And then we still have additional downside. So once we're done with the minor 4, which might take us right through next week, and give all of the press and all of the media their story for the week. Oh, we're breaking, we got a chance to get up to 4,600 and start the auction process, et cetera, et cetera. We'll see what happens, but it will still be a minor fourth wave and not a run for the roses. Inflation is still rampant and more prevalent in the news now. So you got both sides trying to say, well, we're the market, we're tougher, we're this, let's show them at bottom. It's just nothing but a line of hype. let it be. So for tomorrow, let's drop down to the hourly chart. I believe we're still going to continue in this fifth. Again, there's the 3, 4. And now we got the 1, 2 of 5. Don't know if that's the 3 of 5. That might be. But this all could be part of a correction. So again, I got to let the market fill in the blanks here. We're leaving open the potential that we can run back up to that hourly 50 at 39.4950-ish. Or possibly try to get itself back above 39.61 and closer to, excuse me, 39.72. And that would then put this in a 1-2, 1-2. Again, these rallies of trying to pick a bottom, I think are here. That's just going to be a part of the way that the markets trade. And I think a lot of it is because it's being done quantitatively, and the algorithms either need to be, worked on a little bit more whatever, but it isn't normally the strength of a rally that I would be looking for. So I'm kind of not getting all caught off guard because I do trade them, but I'm always amazed at how far they'll push in an hour versus over a couple of days. So tomorrow, leave it open. Downside to the upside, leave it open. We have the marching orders. We've got the resistance levels. Downside, same. If we can get it where it'll drop, even if it, from here, if it drops, we're down to that 38.26 number, and that could do it. I'm just feeling we need an additional low or two. And the closer we get to here, the more convincing, in my view, it will be that we're completing the move. So that's going to be about it. We don't really need to fill in too many other blanks. Continue to trade with the moving averages. Continue to trade using your strategy, your trade plan, and work with your stops. And don't be afraid to engage here. There is so much to do. And the signals can be very clear, both via the moving averages, via the breaks. There's a lot of stuff going on. All right, I'm going to leave it there. Have a great trading day tomorrow. And our next update will be on Sunday, May the 15th.